Episode 73. Hey, Johnny, welcome back to your podcast. We are just starting this mini series on life insurance. How's everything going for you, man?
Good. Thanksgiving's next week.
I think so.
Yeah. So it's good.
That's
We are
good.
doing well, man. We're excited. We usually host it here at our house. So
Yeah,
um this will be a fun week for me.
it will be. I probably got the pool all covered up and everything by now.
Oh, that's done. Yeah. But then now it's time we have to
Hot
do
tub.
it in our garage, and I got a heater in there and everything
Yeah.
we have like 20 some odd people over. So it's fun.
Okay.
But yeah,
There's some work involved.
this is the week that we um focus on whatever my wife tells me to do.
That's right. Amen.
So
Amen.
of course, I probably do that every week,
I was
but
gonna say
you
that needs to
know,
be a habit, buddy.
this particular week, it's for sure. I
Yeah,
have to listen. So, and
that's
she's got a
right.
lot on her plate, so
Yeah,
that's
you
for
got to be there to serve and take some things off her plate as
sure.
well. So
Absolutely, man.
yeah,
So
so that's
we'll be
good.
doing it, but we're excited. We're excited. I love it's my favorite time of year, actually.
Yep.
So with the Christmas lights up, you know what I was gonna say? Should have said last week. There was a guy we got home from a trip we were on. I think it was October 15th or 16th or whatever.
Yeah.
This dude had his Christmas lights up across the street from our house.
Uh-huh.
I was like, what in the world? October 16th, man. Isn't that crazy?
Wow.
Early
He must
almost
really love
Christmas.
that season though.
He does. Well, usually I try to be the first one in the neighborhood because I'm like dorky like that. But
Yeah.
man, he's a new neighbor too. He just moved in this summer. So
Okay.
I don't know.
So
I have to have a talk with this guy or
he doesn't know
something.
the Johnny Roberts rules of
No,
Christmas lights.
no, this is getting out of control here.
That's
So
right. That's right. I
um,
love it. Well,
anyway, that's where
some
we are.
the
So
merry season. Well,
it is.
that's
So I'm excited. We got all that going on around here and it's real pretty. So my
good.
wife makes her house like a Hallmark house.
Yeah.
So, and she does
That's
it
awesome.
in November. So when everybody comes over for Thanksgiving, it's already decked out. But
That's awesome. How
anyway,
cool. How
yeah, we could
very
talk
cool.
about Christmas lights for a while, but
We should, yeah.
I know
We
we're
should
going to
do
get
it.
into life insurance, but I can give good tips on Christmas stuff in the yard. We're not quite Chevy Chase and Christmas
Right.
vacation, but
No,
one day I do hope to be able to be seen from a satellite. So we'll
that
see.
could be cool. That'd be really fun. And yeah,
Yeah,
You might, John. I could just see Johnny owning his own satellite. There you go, Johnny's satellite.
Johnny satellite, way up in the
So
sky, you can see Christmas lights.
that's right. Well,
So
let's talk about.
yeah, life insurance, man. Let's
Let's
do
do
it.
because it's fun. Because around Christmas time and the holidays, we're always thinking about family, and our hearts are really warm and everything. And then if we start talking about life insurance, people go cold, and they shouldn't because this is part of family legacy. It's part of protecting your family. So let's dive into today. Last episode, we talked about the different types of insurance, and you kind of gave us three big buckets of types of insurance. And today we're going to talk about one or two of those types actually around the growth, the capital, the income. How could somebody use life insurance as part of a really good retirement plan when it makes sense?
So, once again, we're talking about on this end of it, the kind of the permanent side, the cash value building types of policies, which
Okay.
is whole life, and we also know is universal life.
Okay.
So, you may be saying, "Man, I've got some." First of all, let me put this out there. I got some issues. I got high blood pressure. I got this or that going on. But believe it or not, a lot of things that were declined 25, 30 years ago,
Right.
diabetes, stuff like that can now get insurance policies. It's amazing how the underwriting and the way the companies look at things just because of medication treatment. They're going to look at stuff, and all the things they do, but don't feel like just because you got a couple of things going on, well, this really doesn't apply to me because there's no way I can get this. Not true. There's a lot of places that look at health issues differently. So if these are things you want to add to what you're doing, certainly make a call or get a hold of us because we can let you know what companies, hey, this company will look at you, this one may not. So don't just shut it out of your mind like, nah,
Right.
I'm not going to be able to do any of this, so why am I listening? So um, hold tight on that thought because
Okay.
you never know what's going to happen. But once again, we talked about different financial folks across the board will say this is the only type of insurance you get. On the other end of the spectrum, Mo, if you look at some of the most wealthy people that are out there,
Yeah.
they actually use permanent insurance policies big time
Yeah.
as part of their, I'm talking millionaires and things like that,
Oh,
use these
I just read a book recently. The
policies.
what would the Rockefellers do? I think was the name of the book, and they talked about how the Rockefeller family uses permanent life insurance to keep their money, their millions, going from generation to generation. It's one of the many things they use. I thought, well, that's really interesting. So you're right; it's used by lots of people.
A lot of people, and it's and you don't have to be a millionaire, obviously, but
Right,
it's you can look at principles and traits of people that have been successful and say, hey, what are they doing? You know what I mean? What are the things they're doing? And look at it that way as well as get a whole picture. Okay, I see the benefits of this side, but I also see the benefits over here. And what one matches up with your goals and objectives more so. So
right,
there's not a right or wrong either way. I'm just saying whether it's term or cash value kind, um, it can be right for you or wrong for you. So you need to look into it. And once again, look at it as part of your overall retirement plan because the cash value building sign does a couple things. The cash value is generally all tax free within these policies. And the concept that some of these wealthy people use it for is they kind of become their own, what they call their own bank.
mm-hmm.
Okay. They call you can Google this term and see videos on YouTube all over the place about what they call like infinite banking.
Yeah,
So this is a concept of using permanent insurance to borrow money on yourself. And the way that works on this aspect of these type of policies is save a policy and there's $60,000 of cash value in there.
mm-hmm.
You could go in there and borrow $20,000 against your policy. There's an interest rate they'll charge you, different companies,
Yeah.
could be
Well,
4%, but
it's a
whatever it
loan.
may
Yeah,
be. But the thing about life insurance on this, a lot of these type of loans is, so I've got what I say, $60,000
yeah,
in there in cash
yeah.
value. I borrow 20. So now I've got 40 left.
Right,
But you still get interest credited on the 60,000.
right.
So if you go to your savings account, you got 60 grand, you take out 20,000, guess what? The bank's going to give you interest on what? What's left in
40,000.
there.
That's right.
But on the life insurance policies, you still get interest on the whole cash value, even though so you're making your money work twice. It's still building
Right.
interest, but I've also been able to utilize it for this need or that need. Then I can pay myself back over time.
That's right.
So those are tools and avenues you can utilize life insurance for to kind of create your own pot of money to utilize or begin to draw income streams off of as you get older, in a tax-free aspect. So
Right.
whole lives usually have a fixed amount of insurance interest rate they're going to give you,
Mm-hmm.
and they also might have dividends and things like that. Universal life policy is a little different because it can change. There's two real types. There's variable, and then there's also traditional universal life, which kind of wraps into fixed
Okay.
index universal life.
Mm-hmm.
So index universal life will grow based on certain index strategies. We'll just say
Mm-hmm.
the S&P 500.
Sure.
I have one myself.
Yep.
So what it says is the S&P 500 in my particular index universal life policy, there's a cap, and my cap is actually 12%, which means that I can make up to 12% based on the S&P's growth on my cash value. So if the S&P goes up 18%, my cash value in my index universal life policy will be credited 12.
Right.
If it goes up 6, I'm credited 6, that kind
Mm.
of thing. If it goes up 1, I'm credited 1. If it goes down 20, I'm credited 0, right?
Yeah. But you don't lose any money
But
either.
you
So
don't
that's
lose
good.
anything.
Yeah.
So that's the power of 0, right?
Yeah.
But it allows you to have a cash value growth higher potentially than what maybe a traditional whole life will do because you have higher ceiling. You know what I mean? And
Yep.
but also there may be a few years where you don't do anything, or it could be lower than a whole life. But long term, generally, if we let them do what they're going to do based on the S&P, usually they'll outperform what a traditional whole life or even whole life with dividends will do.
Right.
Not always, but a lot of times it will. But the concept is still the same. Cash value, I can borrow against, pay myself back, do these loans where I'm getting interest on the full cash value, even though let my money work twice in my
Yep.
pocket as well as in my policy to get interest all at the
Ooh,
same
I like
time.
it. I like it.
And that's what those two type of policies allow you to
Yeah.
do. So uh, unique in that aspect of any other financial tool out there. There's nothing else you can take money out of and still get interest on the money you took out of.
That's right.
You know
Yeah.
what I mean?
It,
So, it's pretty cool. Now, once again, you're charged interest on your loan, but by the time you get credited for the interest on the other end.
Right.
If the loan interest is 4%, but I get credit at 8% average over the next 3 years, I've
You're
made
you're
money
right.
on my loan, but use my money,
That's
you
right.
know,
Well, and you can use that money for anything. Like my son has one of
anything.
these, and he bought a house and it needed an air conditioning unit for like 10 grand. And instead of using the financing from the HVAC company, which was probably 20% or whatever, or going to the bank, he just borrowed from his life insurance policy. And now they're going to pay that out. They're going to pay that off over the next 5 or 6 years at their. But it was access to that capital that was just sitting there that gave them the opportunity to borrow from themselves to pay themselves back, and everything's good. Their money's still growing and compounding and all of that. So it's really a cool tool when you think about planning for retirement. And we're going to dive deep in this in the next couple. I think we're going to have to extend this whole mini series. I was thinking we were going to have 3 or 4 episodes. I think we're going to have 6 or 7 or 8, because what you are scratching the surface on is having this pile of cash that continues to grow over time as the markets grow. It's safe because it doesn't lose money, and then you have this cash value, this pot of money that's sitting there. So when you hit the retirement time and you want to start taking an income, you can actually start drawing out that money, and it's tax free. And so I want to talk about I want to pause here. I want to come back in the next episode because I think we've teased our audience just enough to go, there is something here that we need to at least consider as part of a retirement plan. Again, it's not right for everybody,
No,
but
I think going to we talked about how you can get the cash value up, but going on the approach of how you can utilize this to supplement income
yeah,
in retirement tax free is the other approach. And I want to say one other thing too is, say you got 40 grand in your bank account, like that's, you need a new roof and you don't want to get financed. So you're like, well, I can go take, 15,000 out of my savings account. But if you use your life insurance policy, it's 15,000. Yeah, I have a loan on my own money, but I'm also making money on the money that I've taken
right,
out. So
exactly,
that's another aspect you could use that life insurance cash value for, instead of just, I'll just take it out of the bank because I'm not going to
right,
get interest on that money I take out of the bank. So
that's
that's
right,
another, if you have these set up, man, it can, even when you're younger and going through your working years
yeah,
and you're building this cash value up, it gives you different alternatives, like you said, different capital to go to where, why would I do that when I can still get interest on the money that's I used to pay my roof?
that's
I'm
right,
not financing it and paying more for it. I'm actually paying less
that's right.
because I'm getting interest on my money still.
Yeah. And, and
So
and all of that interest, when done properly, goes back into your retirement account through the life insurance policy, which helps you build a bigger nest egg down the road that can come out tax free. It's all part of retiring at new heights. I mean, it's all these strategies, Johnny, that you have that we want to talk about here on the podcast, that you mention in your book and things, because we want people to understand planning for retirement. There's a lot of assets, there are a lot of opportunities, there are a lot of mindsets, there are a lot of strategies that you need to at least consider, and talk to Johnny and sit down and go, okay, here's what's going on, here's what I think. So let's pause here. Let's come back next week. Let's dive deeper into this whole life insurance cash value. How can it grow? How can I use it to get more tax-free income in retirement? Let's talk about that next week. Okay.
cool. Let's do it, man. Happy Thanksgiving.
Hey, thank you, brother. You too.